If your goal is to get rid of your mortgage faster than the 15-year or 30-year plan that you originally signed up for, there's really one strategy in order to get rid of that ahead of time, and that's making extra payments towards the principal of the loan. That's the only way to pay off any loan faster. And I know that's just blows your mind, right? That idea is to make extra payments. The question becomes, what's the most efficient way to make extra payments? Is it the extra mortgage payment strategy? Is it the HELOC strategy? That's going to be what I really break down in this video and compare the extra mortgage payment strategy to the mortgage free life system. Now, I'm not going to go too much into details on the mortgage free life system because I have another video that goes into the details of that, which I'll have linked below if you want to watch it. Before we get into that, we need to ask some questions. The first is, do you even want to pay your mortgage off early? Some people are perfectly okay having that fixed payment and the interest that they'll pay because they're willing to bet on themselves in other places. Maybe that's the stock market, maybe that's real estate. It's just not important to them to pay their mortgage off early. And if that's you, that's okay. I'm not here to live your life for you. I'm just here to teach you a strategy that will help you pay your mortgage off early. So if you don't want to pay your mortgage off early, this video is not for you. Number two, this is the most important question. What is your financial situation like? Are you a saver or are you a spender? Because I'll tell you this right now. If you are a spender and you spend the majority of the money that hits your account every single month, the take home, the strategy that I teach is not for you. The strategy I teach is for the saver. So if you're a spender, you probably want to go with an extra mortgage payment strategy if you answered yes to this question. Now, another question that comes from number two is, are you about to retire or did you just buy a first home? Because these are two different completely scenarios to be in. So we might have to adjust what strategy we use in order to accomplish the goal. Now, I'll tell you, if you are a saver, it doesn't really matter which of these situations that you're in because the MFL system will still be more efficient. And then on top of that, how much other debt. This goes back into whether you're a saver or you're a spender. So there's a lot of things that go into your financial situation. Some financial guys and girls out there that get on the internet and teach these strategies, they act like it's a one size fits all. That is not the case when it comes to financial planning because everyone's scenario is unique and different. Okay. And then number three, does having access to money matter to you? That's an important question as well. So we asked those. Now let's really break down the extra mortgage payment strategy. When you put an extra mortgage payment into your 30-year mortgage, that's what we're going to go off for this video. It does three things. Number one, locks the money up. This is the most important thing, right? Because you no longer have access to the money, and there's only three ways to get it out: cash out refi, sell the home, or use a home equity line of credit. Now, number two, it can leave little to no cash on hand. Okay, so this is going to depend on how large of a chunk you're putting towards the principal each month with that extra mortgage payment. If you're putting the majority, which the strategy I teach allows you to take 100% of whatever's left over. So let's be fair, let's compare apples to apples. If you were to do that same thing with your mortgage, that would leave no cash on hand, forcing you to rely on credit cards or a HELOC in the second position, which are both more dangerous than the mortgage-free life system. I don't think any financial planner, financial advisor, CFP, etc., is going to tell you to take 100% of whatever's left over, put it towards your mortgage, leaving $0 cash on hand. And if he does tell you that, or she does tell you that, might not be the person to listen to if they want you to be relying on credit cards at the end of the month or for an emergency or anything like that. So just wanted to say that because that's a distinct difference between making an extra mortgage payment and using the HELOC, the mortgage-free life system. Okay. And then number three is most do not stick to it. These above, right here, in this above, most don't stick to making extra mortgage payments because of number one and number two. And on top of that, the mortgage company can make this process a pain. I was talking to a guy last week and he said that he made double his mortgage payment, but it turned into be a pain in the butt because he had to end up calling the mortgage company. Took him 2 or 3 hours on the phone. Makes really good money. Time is money, as we all know, taken away from what he could have been doing, could have been earning money. And the mortgage company just made it a pain for him. Now, I know there's going to be comments that your company allows you to make it automatically. Hey, great for you. That is not every mortgage company. All mortgages, for the most part, are going to be different. when it comes to making extra payments depending on the company, okay? But again, I already know there's going to be comment, your way is better. It's okay. This example is what I want to give you here for an example of making extra mortgage payments. $300,000, 3.5%, 25 years left, an extra $100 a month. I know most mortgages right now are above 5%, probably actually above 6%, unless it's a new home and you got some type of special offer. That's going to shave off 2 years, 7 months, and $15,000 in interest. That's what you will save here. Now, back to the 3.5% and why I'm using that in this example. I'm simply using that because the majority of mortgages in the United States are underneath 4%. So if your numbers are at 5, 6, maybe 7%, and you have 30 years left, $100 a month is not going to make that much of a difference. It might shave off a year, maybe 2 years. And this is also going to depend on your balance, the rate, the discrepancy between those. There's a lot of things that go into it. I just used some basic math for this example. It's the same math that I used on the video that I posted on TikTok and Instagram a couple days ago. Or actually, I think it was last week. Now, so that's what this gets you. Locks up the money, doesn't really save you that much time. If you are a savings-driven individual, you meet the other requirements, there's an alternative system that goes against everything we've been taught. It's called the mortgage-free life system. That's what I was talking about at the beginning of this video. If you don't know, it will allow you to pay your home off in 5 to 10 years. So instead of saving 2 years, you can have the entire thing paid off in about 5 to 10 years. Doesn't lock the money up, doesn't do anything like that. It's a very unique system. Again, goes against everything you've ever been taught. But if you're looking to really accelerate how fast you pay off your home, it might be worth looking into the mortgage-free life system. And if you want to learn more about that, I'll link the video below. Anyway, that's all I wanted to talk about was the extra mortgage payment strategy. How, putting a couple extra $100 a month towards the mortgage, not going to make the biggest difference. There's a better way if it's the right fit for you. Watch that video below, and I'll talk to you then. See ya. Bye.